Hi everyone, thanks for tuning in. So in today's video, it's going to be packed with information, so you're going to want to stay tuned till the end, and we have a big announcement at the end of the video, so you're going to want to wait to hear that as well. So first, we're going to go over how the market is doing as a whole, how to predict when stuff like this can happen with the market crashing, and how to react to it. So right now, we're in a pandemic. The market is crashing pretty wildly. This is one of the worst crashes we've ever seen since 1987. So some good words to give peace of mind. We're going to go over an article by Morningstar. Here's how it goes. Now, fear has spread to even tendered investors regarding the long-term implications of the coronavirus outbreak, which has had a larger impact than almost any expert predicted early on, and by all accounts is likely to remain with us for some time to come. But as was true when Warren Buffett wrote his Buy American New York Times opt-in in 2008, fears regarding the long-term prosperity of Modi companies make little sense when measured from our bottom-up long-term assessments of the fundamentals of these stalwarts of American industry. In short, the market may be doing really bad right now, but the companies with good fundamentals will always prosper and will always be the big gainers. You can consider now a time where everything is on sale and you can make good purchases to ensure a better future. So we're going to talk about the market. First things first, a good way to tell if the market is overvalued as a whole is to look at the PE ratio. The price to earnings ratio dictates how valued a company is, and you can do the same thing with the market. Too high of a PE ratio and you can tell the market overall is way overvalued. Now, how to react with the market dipping so crazily fast? A strategy I've been using is every time there's a drop in the market, I take about 20% of my funds and buy into my stocks. We'll go over what stocks I've been looking at and what I've been actually purchasing. So stay tuned for the end of the video for that. No one really knows when the market's going to drop or rebound. So one of the reasons I do that is because every time there's a drop, I invest more into it. So if there is a bounce back, I'll be the first to rally. And if there's not, I haven't used all my capital assets in order to purchase these stocks. Some other things I want to go over are some common myths about stocks. So first things first, it can't go any lower is not true at all. As you can see right now at the market, it's hitting new lows for all companies in either years or decades since they went public. Another common myth is that it has to bounce back. It doesn't have to bounce back at all. It can keep going down lower and lower and lower. But for some solace, understand that the market has never been this high ever. So all the stocks that did crash in 08 and in 87 all had to recover. So the first thing I like to think of is what stocks will rally first after the market crash. With a dip like this, it's affecting every single sector, but the sector I've been looking at mostly is financial stocks. A lot of banks rally first right after a crisis because they're first ones on the scene. And the good news is that with all these new tax reliefs and with the government really trying to combat this to keep the economy afloat, we're going to have a better future after this crisis ends. Now, another thing you could do is in this market, you can start shorting stocks and or you can start doing puts. Now, I wouldn't suggest doing shorting or puts, mostly because most of the time you don't make money. Puts are options and a lot of people don't understand how they actually quite work, and it's really hard to make money doing so. As far as shorting goes, whenever you short, you got to understand too that even though you're shorting a stock, you owe those stocks back. You have no wall of protection if said stock skyrockets up, and when you're holding on to a stock that you're shorting, you don't get the dividends payable to you. With all that in mind, here are my strategies that I've been using in this market and what sectors and companies I've been looking at and been investing in. Now, a quick disclaimer, I'm not a licensed financial advisor, nor am I a licensed financial professional. Therefore, I do not provide any financial investment advice. You're responsible for your own money and decisions. Please consult a CPA for professional advice. Now, with that in mind, let's just dive right into it. So first things first, no one knows how long this bear market is going to last. So I suggest you gain as much capital as you can so you can start investing. Find a list, find some stocks you want to buy. With your capital, only invest 20% at a time. Use about 20% of your money to buy these stocks, and every time there's a drop, put in about 20% more of your total capital. The reason being is because you don't know when the end is going to be the bottom, and you don't know when we're going to start going back to the top. With the government trying to combat this as best as they can, the market could rally, and you don't want to miss out on the opportunity by not having any money in the game. So some of the stocks taking the biggest hits right now are going to be airline companies, who are also known as historical losers, so that wasn't really hard to see from the get-go, and a lot of entertainment industries and a lot of traveling companies. I'm going to put a screenshot up right now of some popular companies in these stocks and how big of a hit they've taken in the last few weeks. Now, the other sector I want to talk about is all the stocks that are planning to rally as soon as this is over. So here's some stocks right now that have hit new lows and why I think they're a good buy. So what a lot of people don't know is that when you buy a stock, you can look at the book value of a stock. Say they had to liquidate all their shares entirely, you can see what they would pay out each individual investor for their common shares. Kind of like a blue book for cars, but for stocks instead. You can find solace in this knowing that a company went under, that this is what they should trade at. Now know that this number is skewed because they go based off certain investing principles. For example, let's say you have a company that invests in gold, and when they first bought their gold, they bought it at $10 an ounce. Now gold is worth, let's say, $900 an ounce. Their blue book value will be greatly undervalued because they're going based off when they bought the gold in the first place. The next thing I want to go over, pharmaceutical industry and the companies that are trying to combat this coronavirus, and which ones are looking for a cure and which ones are doing treatment. So here's a list on the screen of all the companies that are trying to find a cure. The only one today that actually went up was INO, and the pharmaceutical company as a whole went down in general. But here's some stocks to look at in case they come up with a cure. These are the ones that are going to rally the fastest since they'll have a virtual monopoly on this cure. So with all this in mind, when you're picking your stocks, you want to pick a stock that has the most crystal clear fundamentals and that can withstand this, and when this is over will rally the fastest. Generally, you don't want to pick a stock that has too much institutional sponsorship or is known by Wall Street, mostly because of the fact that if Wall Street already knows about the stock, they only about have 20 to 30% to gain as soon as they start promoting the stock. If Wall Street knows about it, everybody knows about it, and there's not many profits left. So look for your stocks that are up and coming. And as of right now, since the market is taking such a huge dip, even a lot of blue chip stocks or most blue chip stocks are greatly undervalued. Go ahead and look at the book value on all these stocks and decide which ones you would greatly enjoy investing into. Understand that this will pass, and great investing opportunities are actually right now. This is one of the best times for investors because if you don't have a lot of money to get into these stocks, a lot of the stocks that you would normally not be able to purchase, maybe due to lack of funds or the shares being too high, you can start purchasing those at a great bargain. So I did mention earlier in the video that I was going to show you guys what stocks I'm actually investing in during this crisis. If you want to see those videos, there's a link below and you can click onto it. It'll take you to my email subscription list. It's free to join as of right now. So go ahead and check that out and let us know if you like our picks. Thank you for watching. Like, comment, and subscribe, and share this video with your friends so that way they can be more educated on the market as well.